stock market crash on the horizon? Well, in this video, we're going to discuss it. We're in a live video right now. I'm giving it an 80 to 85% chance that the market is about to correct. It's already showing every sign that's what it's going to do. Every bit of evidence is to suggest an 80 to 85% chance of the main market giving up 10%. I'm fully in on the S&P. What am I going to do? This is my real money. As you can see, this is my real shares. I'm 100% in the S&P. I've lost around about $1,300 in the last couple of days. It's quite a bit. Am I concerned though? Am I worried? Well, I'm not going to do a Graham Stepan like he did yesterday and doom and gloom and the world's coming to an end with his Ferrari behind him in the garage. I'm going to be a bit more honest and share with you exactly how much shares I have in the S&P, and I'm going to tell you where I feel it's going to go. I don't feel any stress whatsoever. I'm not worried. There's no sad face. There's no drama. None of that stuff, but I will tell you now, the chances of a 10% correction are extremely likely. It's already started, and it could happen as early as after hours tonight and then going into the Friday sell-off. Absolutely. Now, let me say why I think we're going to get a 10% correction. Let me say why. First of all, need to look at the fear index. First of all, what everyone's doing. We were in extreme greed for 3, 4, 5 months in between greed and extreme greed. We've had a great run. We've had a 30% run, which is phenomenal. One of the best years ever for the S&P. And whenever that happens, we get a correction because it makes sense. What goes up has to come down, and not back down forever. We'll set new all-time highs again. No doubt about it. I'm not worried about that. But for now, we will get a 10% correction. Now, if you've just come in to the S&P, you might be concerned. I'm in the S&P and I've just come in really over the last 3 months. If I share with you my actual position, look, here's my S&P, 100% in. I was up 10%. It shows 99.98 because I've got a couple of free gifts from Robinhood for Apple, not complete shares, just like $50 or so. But that's why it's 99.98. So I'm 100% into the S&P. And if you can see, I'm currently total return 7%. It was around about the 10%. So we've already given up just under the 3% already, and it's on the way down. Now, for me, what's going to happen is, and I'm 100%, I mean, even though I'm saying 80, 85%, because from a statistician's point of view, statistically and looking at the figures, it's 85%. But I'm personally 100% believe it's going to go down. I've got no doubt in my mind whatsoever, but I can't say 100% because nothing is 100%. Of course, the numbers would speak to me and say 85%, but in my mind, it is 100%. What am I doing? Selling, holding, buying more. Well, I've got a very precise strategy. I've already made my mind up. I'm playing 5 moves ahead like chess, not like checkers. Very, very important to think ahead, not just be reactionary, but be proactive. You already know what's going to happen if it goes up. You know what's going to happen if it goes down. You've already made your plans. You're following your plans like a general, marching into a battle. You're not reacting to this. You're proactive. Now, those who are reacting today, those who are selling out today are doing the wrong thing. But without those that have no stability, those that have no conviction, those that just buy and sell every 5 minutes, we need those people because the market doesn't work without it. You can't just have things going up forever. They have to go down so people can come in the market and trade again. There's a difference between a trader and an investor, and I am solely or mainly an investor. I have scalp traders, on the show, but at the moment, I am primarily a long-term investor because of the direction of the show and the people that I'm interviewing, the CEOs and all the rest of it. I want to be out of the market just owning the main index itself. But if we look, let's probably best to show you on this screen. If we look over the last 3 months, you can see what an amazing rally we've had. We started here. I was at 46.7 and now 50. I mean, it's been a great run. Absolutely solid all the way up. Really, really great. Really, really great. In fact, it's probably best I show you on this screen, to be honest with you. It might look a bit better. If we show you over the last 3 months, you can see how it's been rising up. I'll just clear the bottom screen and make it a bit clearer for you. Get rid of that look. You can see over the last 3 months, it's really started to rise nicely. But we've kept on trend. We've kept. I'd buy here, and off we'd go again, and I'd buy a bit more here, and I'd buy a bit more here. Kept buying over the last 3 months as I earned money on YouTube. I'd buy a bit more each time, wait for a drop, using maximum amount of my margin up to the free margin that I've got with Robinhood. But what I said to you was, when we break this trend and this line, that invisible line that runs through here, once we break that, which we've done over here now, you can see we've done that as we scroll there onto the next stock. That's the way. That's just the way Robinhood works. You can see we've now broken trend. We've now broken trend. It's now a correction is about to begin. So what we've got now is people selling off, taking profits. They've had enough of it, and that's fine. But that's not for me. That's not my style of investing at the moment. And you have to adjust and change. But right now, that's where I am, and that's how I'm managing my money. So what does this mean? It means we're going to get, in my mind, 100% pullback, but on paper, it looks, I can identify an 85% chance looking at all the figures and the numbers that I am looking at, and I've given it an 85% chance. Now, what does that mean? For me, as you can see, if that happens, it will bring me right back down to where I was. So, would it be a bad 3 months? Would I have lost? No. Because I'm all in and I'm all invested, I earned as many dividends as possible. I earned about $300 over that period on dividends. So I've earned $300. I wouldn't have had that unless I'd been all in. But is it right to sell now? Well, no, it's not, because I've bought the majority of this on my brokerage account, and I would, if I sold it, would be paying capital gains tax. As you can see, I was about $4.5 grand. It's now back to $3.5 grand. I would pay tax on all of that money. 20%. 20% of that money would go as profit. Does that make sense? Am I going to lose 20% by it going down another 7? Obviously, it doesn't make any sense. For me, there's no point. If I was hundreds of percent up, I was Warren Buffett, I bought this years ago, then perhaps I might want to trim off the top a little bit when I know it's going down. Or if I don't need the money, if I'm Warren Buffett, of course, I wouldn't bother selling either. I'd be living off the dividends, which is exactly what I am doing. And if you put those dividends in trust, you don't even pay tax on those. Anyway, so there's all that to consider. So I'm not going to sell. However, I'm fully aware that I'm going to lose about $3.5 grand. Now, of course, I'm not going to lose it, because I got the $300 worth of dividends, which I wouldn't have earned unless I'd bought those shares. They've just gone down in value for now. And what that will mean is, once we get to that level, I have got a whopping $100,000 sitting there ready to be deployed and start buying. Now, and I will, right? I've got, as you can see, the margin I've used is 908, just inside my 1,000 free money, if you like. I've earned more money on the dividends than I would have got in uninvested cash, earning 5%. So it was right for me to buy it. Things could have carried on going, and they can turn around at any minute. Remember, in history, bull markets last a lot longer than bear markets, and we always recover, and things always improve and always go to new all-time highs. We just don't know how long it's going to take. But it always makes sense to remain in the market. I'm not going to sell out or whatever. If I was up hundreds of percent, maybe I'd be trimming a little bit if I needed the money. But if I didn't need the money, like I just said about like Warren Buffett, then I wouldn't be selling. I'd be living on the dividends anyway. But that's the two situations. But for me, I'm going to wait now because it's broken trend. There's no need for me to start buying, even though I can buy for less than I paid yesterday and a couple of days ago and a week ago. I can buy less. I'm still going to be paying more than my entry point 3 months ago. And I believe it's going to go as low as that. So because I'm going to be paying interest on the money, even be it 8% over the year, I'm only going to be in the margin for a month, 2. It will come back up again. I don't think this is a long-term correction, a long-term sell-off. I don't see it as a 1 year or 2 year, and it can happen. It can happen. I do believe it's a short-term thing. But however, even at 8%, because we know the rates are going to come down, that will drop to maybe 5%. It would be worth spending 5% on margin to earn potentially a 10 or 15% rally, which it will be once it rallies again. So as we start to drop at 10%, I will spend my margin. I will start to buy the S&P on margin. When it hits my all-time lows, and my all-time lows were 3 months ago, okay? So it's going to get there. Then I will probably buy $10,000 worth of the S&P. Not a huge amount, just a little bit, but it will enable me to get those extra dividends just in time, because we've got another 2 months before the next round of dividends come in, and we're paying about 150 to 180, what depends where it will come in. So for me, that will pay for the interest for that period of time. So I will get free interest from the dividends by buying that dip at 10%. All this has been already calculated, and now I'm presenting it to you in just a nice, easy way of doing it. If you're going to pay 8%, it's more than likely going to come down to 5%. If you're buying, if you're going to use a certain amount of margin, which for me is about $5,000 to $10,000, that's going to be paid for by the free dividends, the dividend payout to cover that interest. So it's free money, still free money, and allowing me to do that. Now that's what I expect to happen, and then it to go up, and then great, I can pay the margin back over the next couple of months, and everyone's a winner. I've got many more shares of the S&P at a lower price where I started. I've got the dividends, it's covered the interest, and now it's gone up, and now we're paying it off, and now we're all singing, all dancing. Great. Now, what happens if it goes below 10%? I don't think it is, first of all. However, I want to prepare for it to go lower. I want to prepare for the crash to go lower, and there's always a chance. I have given it a 15% chance of it going lower to about 20%. Really quite low, but there is a chance. Now, that's why I've only gone $5,000, $10,000 of margin. If we do go lower, and it does go 15 or 20%, then I'm going to spend a lot more. I'm going to jump from 5 to 10 to 10 to 20. I'm now going to have, and that's in addition to the 10. So I'm now going to have about $30,000 of margin at 8%. But now I've got a 20% discount. Now, worst case scenario, over history, we've had 50 and 75%, but they bounce back pretty quickly. And at 50%, and these are extreme conditions that these happen, and I don't think we're in an economy like that at all. So I'm not worried. But if it did go down 50%, I've now got the remainder, the other 50, sort of 60 grand of the 100 grand to buy and go mental on it, literally load up 100 grand a margin, and I'm happy to do that, because by that point interest rates will be way down and will be at 2%, and I'll be covering that interest payment with the dividends or thereabout. It won't take long, and then as we start to come up, I'll be paying that off quickly over the next year or two. But I will have a much lower position on the S&P, and I'm very bullish long term on the economy anyway. So that's my strategy. That's what I think is going to happen. That's how I'm going to play it all out. What are you going to do? Are we about to get a major crash? I do think we're going to get 10%. We may even go lower, and that's my strategy. What's your strategy? How are you playing this market? So there you go. There's my thoughts on where the economy's going. A market crash is now 85% likely. Click above my head for all the links down below in the description. Over here and over here, I will reply to all of my members. Go to the 12-hour stream, and I'd like to answer all of your questions. Are you in? Are you buying this? And we'll also run a poll as well. Do you believe we're going to get a market crash? Until next time, as always, take care of yourselves and each other.